Good morning. This is Lance, an equity analyst for ABCAP, and welcome to Daily Trading Notes. The Dow and the S&P closed higher as investors pick up the battered energy and financial stocks. However, the two indices came off session highs as the tech sector tumbled. According to a New York Times tracker, there were 60,000 new U.S. cases yesterday, up 64% on a 14-day basis. Dow Jones was up 160 points, the S&P was up 5 points, while Nasdaq fell 87 points. For a market outlook, the market currently lacks buying catalysts to cause a sustainable rally. Watch out for the major support at 6,000 since risks are still to the downside for the country in the absence of a working vaccine. In other news, more than half of Philippine firms are uncertain of recovery according to a ADB survey. ADB, together with the DOF, conducted a survey during April and May to assess the impact of the coronavirus to different businesses. The survey showed of the 2,481 companies, 51% of the companies were unsure of recovery, 30% stated that they may need 6 months to recover, while 18.6% were optimistic to recover within 3 months post-ECQ. In our view, when the government placed Luzon under ECQ, it greatly dampened economic activity since Luzon accounts for about 70% of GDP. As a result, a lot of companies needed to cut down on costs and lay off employees. Unemployment rate surged to 17.7% in April, or a total of 7.25 million jobless people. Note that employment growth is a lagging economic indicator, which means we may likely see an increase in jobs growth once we start seeing the economy recover. As the virus cases rise and as the country continues to implement strict lockdown measures, business and consumer confidence will likely continue to be low, which is bad for the Philippines since it is a consumer-driven economy. Also in other news, the Department of Transportation rejects call to drop high-risk infra projects. The Transportation Department stated that it will continue its massive infra projects such as railways and airports, despite the warning of economists that some of the projects' long-term viability looks impaired, given travel restrictions and social distancing measures. The economist from Ateneo Center for Economic Research and Development also stated that it might be better to rethink the Build program and modify the infra program with a focus on expanding budget for the government's health and social amelioration efforts. An alternative suggested was to make way for low costs and more inclusive road transport projects amid the pandemic. In our view, government spending supported the local economy during its contraction last 1Q, and will likely continue to be the driver of the Philippine economy in the coming quarters. Although high government spending is necessary, it is also important to focus on the quality of spending. Given the current health crisis, it might be better to gear resources towards efforts in flattening the curve and supporting the health sector. And that's it for our market outlook. Have a good day.